Investment bank CEOs are known for offensively large bonuses, presiding over dozens of money laundering scandals but certainly not being personally blamed for them, and DJing at ket-infused EDM festival. Wait, what? That's Goldman Sachs CEO David Solomon, aka DJ D-Sol. But what the fuck do bank CEOs actually do? I have infiltrated one of the world's largest investment banks and been undercover just so that in this video I can give you guys the inside scoop. Not really, I've been working in investment banking the last few years to find a sugar mama, but your boy struck out, so now I'm making YouTube videos. If you ask Google Gemini what a bank CEO does, it will give you this lovely soliloquy about how an investment bank CEO sets corporate strategy, oversees operations, maintains public relations, manages the bank's financial performance, and makes sure the bank complies with local government regulations. But as you can see from this Picasso-level graphic I just made, that's a load of crap, because all those key functions have senior individuals who are experts at doing that one thing, and therefore the responsibility is left to them. So here's what a bank CEO actually gets up to. In a nutshell, bank CEOs are expert clout-infused dick swingers, process sledgehammers, and wheel greasers. Here's how that works. The front office bankers who are working hard originating new business commonly face roadblocks in that process. For example, the client might have hesitations about our bank, which I'm going to call Alpha Bank so I don't get sued by a real one making this video. Anyway, the client might be concerned about Alpha Bank in Morocco where the bank messed up processing the client's payments a few too many times, and therefore the client is refusing to mandate Alpha Bank on an advisory role for an acquisition in the US, even though the front office bankers put in mad hours advising the client for free before this deal came to life. You might be thinking that makes no sense. What could an operational problem in Morocco managing payments have anything to do with advising on a US acquisition? Absolutely nothing. But ultimately we're dealing with people, and people come with emotional baggage and will connect one thing to another regardless of how relevant they are. So the front office banker working on the deal will try and resolve this himself first. If this fails, he'll call in his team head to strategize and help solve the issues in Morocco, or if that's not possible in a good time frame, encourage him to speak to the client CFO to get him on board with the US deal and convince him they'll fix the issue in Morocco in the near future. When that inevitably goes tits up because the client CFO has more corporate clout than your team head, and because the client is always right, Alpha Bank CEO gets called in to speak to the client CEO. These two will already know each other from major banking events that Alpha Bank hosts. So Alpha Bank CEO needs to acknowledge and apologize for the problem, and then remind the client CEO that the bank and the company have a very long and healthy working history, and it would be a shame to lose this just over one advisory deal on a few payments in Morocco. And he needs to do that in a way that's very casual, doesn't sound pressuring, and that he's mobilized boots on the ground to fix the issue in Morocco. And yes, if you're wondering, bankers do use military terms to make it sound like their job is more serious than it actually is. The client then accepts this resolution and the bank gets mandated on the deal and makes some fat fees, so everyone goes home happy but high-key stressed out, except for the junior bankers who have to resort to shitposting on Instagram through Liquidity's DMs. Whilst all of this was going on, Alpha Bank CEO was actually at an important event called the IMF meetings. This is a major conference that happens twice a year where banks, world leaders, and public financial institutions gather to discuss macroeconomics, geopolitics, national infrastructure, and financial services. The bank will send the CEO plus some senior delegates and big deal winners to put their best foot forward and to meet with hundreds of clients throughout the week. Something you may not realize is that whilst the news usually covers how big companies like Apple, Amazon, or whoever worked with a bank on a big deal, a massive chunk of bank revenues actually comes from deals done with governments and the various parts of the public sector world like sovereign wealth funds, central banks, or multilateral development banks. Okay, so really quickly, at a high level, MDBs are where countries' financial bodies band together to facilitate financing national-scale infrastructure projects to improve circumstances in those countries. The bank's relationships with these institutions are vital because no one has more money than the government, so there's plenty of it to pay to banks on deals, whether it's providing financing for a piece of key infrastructure like an airport or railroad, or even in some cases advising on an IPO of a government-owned company. These meetings also come with a cheeky side benefit of any time your front office bankers is talking to the client in the future and they think the client's hesitant to move forward with a particular deal, they can simply gaslight them by saying, I believe this was discussed between Alpha Bank CEO and your CEO at the IMF meetings, which means the client will feel they have to say yes because it's low-key implied that their CEO is supportive of the deal and they're scared of getting fired. Alpha Bank CEO will meet with senior figures at all of these government institutions to discuss domestic development projects and tell them how Alpha Bank is really well positioned to assist and that Alpha Bank CEO will get any tricky deals over the line. But that's not actually the only reason that Alpha Bank CEO is there. The bank may be interested in expanding its geographic footprint into new markets, which is complicated as it requires a banking license in that country, lots of regulations to be met, and can be a very slow and messy process. So it's a good idea to make sure that when you do make a move into that country, that your bank's senior leadership is already well acquainted with that country's president, finance ministers, and key investment advisors. Now you have an inside man or woman who can apply pressure to the relevant government body or regulator who the bank needs to say yes to the hundreds of documents it's filed to do business in that country. When Alpha Bank gets a new CEO, all of those things we mentioned earlier like organizational restructuring and corporate strategy get called into question. The CEO's first task will be to review the existing structure and strategy and to praise its predecessors' genius and success, but at the same time to take a sledgehammer to it and make a completely new one. This might seem counterintuitive, but if the CEO doesn't announce big grand changes, the investors won't be impressed or excited, so the share price will stagnate, which is bad for both the investors and the CEO, since her compensation is partially made up of company stock and she wants to get a big fat bonus in her first year, so she better start pumping that share price if she wants it. So the CEO will sit down with her executive committee, think of this as the meeting of mob bosses where there's a new kingpin in town, she wants to suss everyone out and set the tone, which she'll probably do by killing off some powerful subordinates. I mean, she will announce a strategic organizational restructuring to streamline decision-making and lower the bank's cost base. After laying out this plan for all the bank's key pillars and discussing it with the chairman or woman, this will get passed down to the various global heads to execute over the next few months, or in a bank's case, typically years. Until 4 or 5 years have passed, the changes are finally done, and now there's another new CEO as the last one just retired, and the process starts all over again. Now there's a new CEO in town, she'll begin by hosting frequent town halls. This is a public forum where the CEO will take any question from any employee on any topic, but you can be 100% certain that those questions were pre-selected and reworded by the PR team to not stir up too much of a reaction when it gets read out. After all, this is a bank where everyone is extremely conservative and must act humbly and proper at all times. There are really only 2 questions any banker cares about. Why are we not getting paid more money? And when are you going to fix all of the archaic internal processes stopping us from printing absolute mad stacks from what our credit risk teams claim are risky deals? For the question about low pay and bonuses, the CEO will respond by saying they continually review employee pay and bonuses, and their research concluded that they're in line with or even above the rest of the market, but they'll never actually show you who they benchmarked that against. When an employee speaks out in the middle of the town hall calling their hours BS, the CEO will then completely abdicate responsibility by saying that the amount of money the bank has to give out in bonuses is actually decided by the board and is out of her control. Then in response to the question about internal messy processes, she'll say there are dozens of ongoing projects to digitize and streamline efficiency across the bank, but won't give you any specific budgets or timelines, which is essentially because she doesn't want to be held accountable for any of it failing. These town halls have a tendency to get leaked and can and do end up on the front of the Financial Times or Bloomberg. So whilst the employees are told the town halls are for them, the truth is this is the CEO's way of indirectly speaking to the media and managing investor relations. So back in the trenches, things can get quite stuffy in investment banking. If you wanted to lend a large amount of money to a big company, say $1 billion, then Alpha Bank's CEO would have gotten a heads up from the company's CEO before negotiations start where the company's CEO say we need $1 billion and we need it yesterday, to which Alpha Bank's CEO will say, we got you bro, don't worry, it's only a bill. But there are various regulations to adhere to which determine things like how much money a bank can lend relative to how much liquid assets the bank has, or what type of lending structure is suitable for the client you're working on, and what country they're operating in. There are also dozens of internal controls in place that protect the bank, and there are a bunch of flowcharts which govern how the decision is to be made on whether to lend that company $1 billion. And those flowcharts all have flowcharts nested within them to detail each part of the process. Because of this, deals can get stuck in one place or another because at each stage there's a different human who has to make a judgment call, approving or rejecting their aspect of the deal that relates to their business area. For example, the capital and business strategy teams question the logic of the deal because they think the bank could use its balance sheet, i.e. its ability to lend money, better elsewhere. Then the credit risk team gets scared of the client's spicy leverage ratios, i.e. how much money it has borrowed relative to how much profit it's making. And then to top that all off, the financial crime team gets nervous about sanctions and the company's geographic footprint, and on and on and on. The front office banker working on this deal is used to this process and battling at various stages, but sometimes you hit a brick wall because an approver digs their heels in and is refusing to approve your deal. So you go up the risk team's hierarchy and your own team's hierarchy, getting seniors involved, trying to find common ground. This can take multiple weeks because everyone is busy working on lots of deals at once, or lounging on a sunbed in the French Alps during après. Meanwhile, the client is fed up of waiting, so you have to take extreme action before it becomes a relationship issue between the bank and the company. That's where Alpha Bank's CEO comes in as a giant tandem roller to absolutely annihilate the existing process. With a quick Zoom call from a team head to the CEO summarizing the issue in literal seconds, the CEO will then send an email that literally just says, "Team, let's make sure we get the right outcome for the client here," which is finance bro talk for, you all better get this damn fucking deal done before the company's CEO pulls out all of our business with them and ruins a 50-year relationship and makes our weekend golf trips very awkward. This heavy top-down pressure doesn't actually remove the process at all. It simply means every single person involved will change from a no to a yes, so you can complete the process with a full audit trail in super speed. I spent 4 years of my life undercover to make this channel, surely that's worth subscribing for.